required distribution.
Yeah, just one of the many benefits of a Roth IRA is that lack of a required minimum distribution for the initial account holder.
When you talk about how to figure out how much your required distribution is going to be, how do you determine what that amount is once you hit the age at which you qualify for them?
Talk to a professional, I think, is my answer, because it is pretty complicated. But the IRS publishes this giant table about uniform life expectancies, and then you have to, compare your age to the table, compare it to your year-end balance, and come up with that dollar amount. And that dollar amount is the one that has to be withdrawn by the year end of that year.
The guide is titled Frequently Asked Questions About RMDs, and the way to request it is by calling 800-393-4001. Again, the guide is titled Frequently Asked Questions About RMDs, and that phone number to request it is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here today, and as we kick things off, we're kind of trying to recover from what was a tough start to September and a tough start to the week in markets yesterday, with all three major indices down at least 1.5%. The S&P down more than 2%, the NASDAQ down more than 3%. And the headline in the Wall Street Journal this morning, or rather late yesterday when it was published, was fears of economic slowdown spark stock market sell-off. This, I guess if you want to try to point to, some proximate causes, again, no one knows exactly why anything happens in markets. But yesterday morning, we did receive some negative manufacturing data from the Institute of Supply Management as well as from S&P. Both of them conduct surveys of purchasing managers, and both of them had those surveys come in pretty downbeat territory. And so what started off as maybe about 0.5% to 2/3% sell-off in the morning grew over the course of the day into a much larger sell-off of a couple percentage points. And so we opened today a couple points down, or a couple percent down from all-time highs at this point. Mark, your take on kind of what we're seeing so far?
I guess it's pretty universally agreed on and hard to deny that the data that we get in between our quarterly GDP, which is the big one, we all wait for GDP, though it's a little bit backward-looking, a little bit stale by the time we get the data. The data since the most recent GDP report, and GDP was healthy in the second quarter, it's worth remembering that, 2.8% on an annualized real, that is after inflation, basis. That's way above what most researchers think is the economy's potential or speed limit. So it was healthy then. Has it deteriorated a lot since then? Some of the employment data we've gotten, Chuck, as you know, as we've talked about in the couple months or so since that last GDP reading, has suggested that the labor market is easing. Good news for inflation. Is it bad news for the economy? Possibly. But those employment decisions were made in the second quarter when we know GDP growth was growing at 2.8% real, annualized. So I'm not going to buck the consensus. I'm not a macroeconomist that updates his forecasts every day. I'll leave that to the professionals, including those at the Atlanta Fed who do helpfully do GDP Now for us that you talk about a lot, which suggests ongoing solid economic growth. So I don't know. As you could probably tell, I'm contradicting myself a lot here. I'm a little bit confused. We seem to be at somewhat of a potential turning point. But then again, arguably, we always are.
And this is something where the data for the last month has kind of come in a couple different waves. At the start of August, we received some, again, rather downbeat economic data, kind of in late July as well, suggesting the economy was slowing. Markets sold off. The second half of August, we got better economic data, and so markets rallied in response to that. And now, kicking off the week at least, a few different data points suggesting some slowing again. And again, I don't profess to have any knowledge as to whether this is specifically going to lead to recession or not. I've said all along that I think we'll really have a much clearer picture by early October. So we're within 4 weeks, I think, of having a pretty good picture of what the trends are showing us. But as I've said for the last month or two, look, the soft landing is not something that is linear in nature. There are some days where a soft landing is going to look like the economy is reaccelerating. There are other days where it's going to look like you're heading into recession. And that's the very nature of the soft landing, is you kind of have to navigate the path between those. But it's not like every data point just perfectly lines up and you're like, oh, good, like the soft landing is here. Like, no, there are some days where you're going to say, this is bad, and there's some days where you're going to say, okay, this is fine.
I know the phrase soft landing is in common use, but I'll make a kind of philosophical point. We've talked about this too. The economy never lands. It's constantly being buffeted by outside forces. This is why you have people who call themselves macro economists with their big, elaborate models that can only be run on modern computers that are constantly getting updated. I'll refer anyone who's interested again to GDP Now. Yesterday, GDP Now, which is a snapshot at a point in time. It's not a forecast. But as of yesterday, or the day before yesterday, the data suggested that GDP was running at about a 2.5% pace this quarter. As of this morning, with yesterday's aforementioned by Chuck data, that figure is now 2%. So the economy's in constant flux, buffeted by forces, positive and negative, some of them from outside the U.S., some of them from within, some of them just inherent to the business cycle, which is why it's called a cycle. It never really lands. I think what we mean by soft landing is inflation something we no longer have to worry about, and the evidence is increasingly pointing in that direction.
When we look at the economic data, the other piece that I think we always have to remember on this is that in addition to the economy always being in flux, it's not like any of this is actually like the data. And what I mean by that is these are all surveys and estimates. And so taking any one data point at face value as, oh, this is what it is and this is what it isn't, it doesn't really do you any favors. There are two things that I think that you need to do in order to try to make sense of what's going on. The first is to look at trends, and generally, not just like trend from like 1 month to the next. Like 2 data points is not enough for a trend. You want to be looking at kind of like 3-4 data points. Like, hey, is there something that's continued for a couple months here in the data? And beyond that, you want to be looking at different sets of data, because any one of them can be skewed just by how things are collected. As an example, if you just did a survey of real estate professionals inside the 128 loop in Boston, they'd be telling you, oh, there's no inventory, it's still crazy, like people are still, spending whatever they can, blah, blah, blah. If you just surveyed real estate professionals in the Austin, Texas area, where you currently have inventories that are above 2019 levels, they'd be telling you, yeah, like there's just too much inventory, the market's really slow, people are having to cut prices. And then if you ask, well, which one's right, the correct answer is, well, both of them, because they're measuring different things in different ways in different places. So to look at, any one measure of the labor market from, in 1 month doesn't necessarily tell you what's actually going on with the labor market. You want to look at trends in multiple data series, because none of these are the right number. And so the way to try to get more accuracy is find, a few data sets that, have decent methodology and decent ways of tabulating the data, and then look at them over time to see how they evolve and how they change together. And that's how you can kind of build a picture of what's going on, because ultimately, like, we don't actually know how many people have jobs in the United States. We don't actually know how many, purchasing managers increased their orders last month. We don't actually know how many homes were sold, this quarter. Like, these are estimates. Like, we get as close as we can, but they're estimates. And so you have to kind of, take a step back and say, okay, what do we think we're seeing here, and what does it mean? And also, hey, when companies are giving their earnings reports and their conference calls, listen to what they're saying, because they have stories that they're telling as well. And you need to be able to distinguish between, hey, what's fact, that they're telling us, and what is a story that they're trying to spin for their investors to, make things look as rosy as possible. So it's all, you're kind of like a bat, right, Mark? You got this like echolocation that you're trying to send out to figure out where the walls of the cave are that you're flying out of, and you're pretty sure you know where they are, but things bounce a little differently, and you just kind of have to piece the picture together the best you can.
I can't really relate to that, but my impression is that bats are they reckon pretty well. Like they can hit a mosquito from 30 feet away. If we only had that kind of precision. But as you say, the data that we use, they are called statistics for a reason. We don't know the true value. They come with huge errors, and oftentimes we use them for things they weren't meant to be used for.
Let's take a little break here. When we come back, we did get some additional economic data this morning. The JOLTS report, the Job Openings and Labor Turnover Survey. We'll talk to you about what that showed this morning right after this.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699 or request the guide online by visiting their website at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father, Victor, and my brother, Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Summer is just about over, so now's the time to start looking at a fabulous holiday vacation, and there's no place better than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Mark, this morning we got data from the Job Openings and Labor Turnover Survey report, also known as the JOLTS report. And just taking a look through it as it's come out, some takeaways. First, the number of job openings declined to 7.7 million. Previously was reported at 8.1. That was revised down to 7.9 million for the prior month. That number that we came in at was below all numbers surveyed by Bloomberg, so a big miss to the downside in terms of the number of job openings there. The hires rate ticked up a little bit. The quits rate ticked up a little bit. The layoffs rate ticked up a little bit. So all, kind of showing a little bit of modestly higher activity, but nothing meaningful there. And so, again, when we look at this in the context of, hey, this is a survey response rates aren't great, but let's see if we can, kind of figure out what's going on here. The trend over the last, 6 to 12 months is unmistakable now of a job market that has cooled significantly and in some respects is probably closer to like the 2017-2018 job market in terms of where we stand today rather than the very hot job market that we saw from 2021 through 2023.
Yeah, I think that's the unavoidable conclusion from this and other bits of information from reports, public and private sector reports that we've been getting over the past couple of months. One question for me is, was the labor market so abnormally, so unnaturally, if you like, hot, that even today, notwithstanding the recent easing of the extreme pressure that was prevailing over the past, say, couple of years through roughly 6 months ago, is the labor market still hot enough to keep upward pressure on inflation, or at least keep inflation from falling to the Fed's target of 2%. I know in the last segment I said increasingly people are seemingly not worried about inflation. It's receding into the background as a concern, as it should be. But we're not at 2% in point of fact, even if unless you annualize very recent reads, which could be distorted by special factors. Just taking year over year, which isn't the best measure. It's so backward looking, but we're not quite at 2% yet. Is the labor market slowed enough to get us to 2% while not dragging us into recession? This is the balance the Fed is trying to strike, and we won't know that they've done that successfully for some time, probably.
Well, and look, we've talked about this before. The 2% target is kind of a dumb target for a number of reasons. One of which is that inflation has never averaged 2%. You know, you look at decades as a whole, and you can't find one in the post-war period where inflation averaged 2%. The closest we got, I think, was 2.4, maybe it was 2.6% in the 2000s or 2010s, but we've never actually gotten there. We're basically kind of at the post-war average, especially if you exclude like the 70s, which got very hot. Most decades, aside from the 70s, inflation was anywhere between 2.5% and 3% on average, and that was kind of the norm. What we are seeing here, and Mark, I know that you like to take a look at this occasionally, what's known as the beverage curve or the beverage curve. Basically, you take the job openings rate and the unemployment rate, and you plot those on a chart. And what we are unmistakably seeing right now is as the job openings rate has been coming down, you are seeing the unemployment rate starting to move up, just as it has in other business cycles where we have this data for. Again, we don't have the data going back too far, unfortunately, because the JOLTS report only started in 2000, so we've got about 24, almost 25 years of data now. But this does match what we saw in other business cycles where, hey, as that job opening rate comes down, unemployment has gone up, and that is something that I think that we would likely point to as likely muting the possibility of inflation being a problem at this point in the business cycle here.
I guess. I'm not sure the inflation that we experienced, the extreme inflation we experienced, say, 2 years ago when it was peaking, was a result of labor market pressure. It wasn't wages. It was, we now know, special factors or supply shocks coupled with an excess of demand driven by stimulus. So I don't know that the labor market was ever the immediate cause or the problem, although the traditional relationship is, as economists like to think about it, between unemployment and inflation, or some proxy for unemployment, some proxy for output. It could be the JOLTS number we're talking about this morning. It could be vacancies. It could be the extent to which GDP exceeds potential GDP, which researchers try to ballpark. So it's we are back to worrying. The Fed is back to worrying, and so should we be, about whether the risks have shifted from worrying about unemployment to worrying about inflation, to unemployment. It seems weird that they're talking about cutting. I know I'm backing up here and veering a little bit off the immediate topic, but I'm trying to get to a point, I guess. Fed's back. Fed is now more concerned about the risks of a slowing economy than the risks of increasing or upward pressure on prices, and that's just kind of where we're at. This feels a lot more. This framework, this construct, the way we're thinking about this feels a lot more traditional to me. Frankly, it's a relief because nobody knew what the heck was going on 2 years ago, how long high inflation was going to persist, how much pain would be required to squash it. We seem to have lucked out in many ways. I don't necessarily attribute it to Fed skill.
And the real question is not, does the Fed cut 50 basis points in September of 25? Because one meeting ultimately is not what matters here. What's going to matter is over the next 6 to 12 months, what is the path that the Fed needs to follow as far as the number of rate cuts necessary and the eventual depth that they get to as far as how much they need to cut. So if you're sitting here today and you say, okay, Fed funds is between 5.25 and 5.5, it's, hey, when we're 12 months out from here, are we getting down to 3.5 on the Fed funds rate? Are we getting down to 4.5? Or are we getting down to 2.5? Like that's the number that matters. And to a certain extent also, okay, is it going to be something where the Fed does that cutting, in a 4 or 5 meeting period where they're basically done by March or May of next year and Fed funds is at 3.5 or 2.5 at that point? Or is it something where, hey, the economy, finds its footing a little bit and maybe the Fed just does 0.25% per meeting for the next, 8 or 9 meetings and finds itself in that 3.5% range by the end of 2025? These are the questions that matter, not so much, hey, are they going to cut 25 basis points or 50 at the next meeting? Unless you're actually taking an active bet on that, through any of the millions of ways that you can do that in securities markets these days. But I think the more interesting question to me is, hey, what's the path over the next 6 to 12 months and how low do rates have to get? And that's going to be determined by how good or bad the economy is, which we still don't quite know if we're being honest here. Let's take a quick break as we head towards the bottom of the hour. When we come back, we got a couple things to do. First, we got Wall Street Watch coming up, and then after that, we're going to be joined by the one and only Todd Lutsky, who is going to join us for this week's segment of Ask Todd. All that is coming up right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Saving money in an IRA or a 401k can provide tax advantages and are excellent ways to help make sure you're financially prepared for retirement. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're nearing retirement, you need to be aware of the federal regulations regarding required minimum distributions. Once you reach a certain age, you must begin withdrawing money from these accounts. RMDs can influence which accounts to withdraw from first and how much you'll owe in taxes during retirement. If you need information regarding the rules related to RMDs, call us at 800-393-4000 4001 and ask for your copy of our new free guide called Frequently Asked Questions About Required Minimum Distributions. RMDs are a core element to your retirement strategy, and this guide can help educate you on the rules related to them. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's sell-off, where the Nasdaq sank over 3% and the S&P 500 was down over 2%, markets today are edging higher in positive territory. Right now, the Dow is up by 0.25% or 97 points. S&P 500 is up by 8 points. Nasdaq also up by 8 points. Russell 2000 is flat. 10-year Treasury yield down by 5 basis points at 3.78%, and crude oil down 1%, trading just below $70 a barrel. After its near 10% plunge yesterday, Nvidia shares are down 1% today after Bloomberg reported the chipmaker had been subpoenaed by the Justice Department as it seeks evidence on antitrust violations. Meanwhile, in an interview with the Wall Street Journal, U.S. Steel CEO David Burritt said the company would close steel mills and likely move its headquarters out of Pittsburgh if its planned $14 billion sale to Japan's Nippon Steel collapses. U.S. Steel shares are up by 3%. Elsewhere, shares in Dick's Sporting Goods down by 7% after the retailer beat second quarter earnings expectations, where its comparable sales climbed 4.5% above forecasts of 3.6%. While Dick's raised its full-year outlook, the forecast appeared muted compared with expectations. Sticking with the retail space, where Dollar Tree shares tumbling 19% after the discount retailer missed second quarter earnings expectations and also cut its outlook. And Hormel Foods, the parent company to food brands including Spam, underwhelmed on its quarterly results. The company also lowered its forecast, sending that stock down by 8% so far today. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're joined now by Todd Lutsky from the law firm of Cushing & Dolan. The segment here is Ask Todd, and the premise is very simple. You get to ask Todd your estate planning questions live on air. We've got the studio lines open at 888-205-2263. Last week, I know we left one of you hanging, so make sure that you call in early to make sure that you get in line to ask Todd your estate planning questions. Again, that number is 888-205-2263. Phone lines are open, so get all queued up there, and we'll get to you as they come in. Again, 888-205-2263 to be able to ask Todd Lutsky your estate planning questions. Mr. Lutsky, how are you today?
I am doing well, and yourself?
A little tough. Tough this week.
What happened?
Well, opened my paycheck on last Friday, and all there was in there was a big thing of parsley.
Yeah?
Wages are being garnished.
Yeah, you got to watch that.
Yeah, it's a real issue. Todd, I want to talk to you about some different kinds of trusts today, just to kind of clear my head on the whole topic. I want to start first with nominee realty trusts. What are they? What do they actually do?
So this is one of the, unfortunately, most commonly used trusts because lots of times, real estate lawyers will set them up for people just because they bought a piece of property, and they'll throw them in there, and they're used just so frequently, but they're so misunderstood. What I mean by that is I know it sounds strange, but they're not really a trust at all. I mean, it's got the word trust in it, which just adds to the confusion. But a nominee realty trust, the word nominee means that it's more of a principal agency employer-employee relationship. So what I mean by that is, and when you put assets in these trusts, these nominee realty trusts, you got to look to the schedule of beneficiaries because it's a complete flow through. So the schedule of beneficiaries is actually the owners. And here's the power they have. There'll be language in the trust itself that says the trustee of the trust shall have no power to deal with the trust property unless directed by the beneficiaries. Well, that means that the beneficiaries really control this and they are really the owners of the property. So why this is so problematic, you say, well, that doesn't sound so much of a problem. Well, it generally is because people put this property, let's say they put their piece of property in the trust, and then they list the schedule of beneficiaries as their kids. And they didn't mean to give their kids the property, but they did just that because they're the ones listed as the scheduled beneficiaries, so they're really the current owners. And why that's a problem is what happens if one of the kids get a divorce while mom and dad are living? They might not even realize they own it until the divorce comes, and I can assure you the divorcing parties will discover that this property is really theirs and now part of the marriage. And you could have parents having to buy out their own home, not realizing they gave it away. And that to me is a big issue. So lots of other problems can come with it, but that's just a trust. Look at your schedule of beneficiaries and determine whether or not you've got the right people listed and maybe how to undo it. And they are fixable, by the way. So at the end of the day, folks, that is something that you should consider. Now, let's look at one other thing. In this case, what if you put rental property in one of these nominee realty trusts? If you put rental property into the nominee realty trust and the rent is going to you, mom and dad, you put the rent property and you're getting the rent, well, then you're not entitled to the rent because you don't own the property. And the IRS doesn't tend to like that too much. The IRS says, well, wait a minute, the rent might be taxed at a higher rate if it went to the kids. And they're the ones really entitled to that rent. So at the end of the day, that could be an income tax problem on top of that. So lots to think about with these nominee realty trusts.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question that you'd like to ask Todd about your estate plan, studio line here is 888-205-2263. Again, that is 888-205-2263 to get your question right over to Mr. Todd Lutsky there. We're going to take a quick break here, but when we come back, it is going to be right to your questions with Todd. Again, we got room on the phone lines for you at 888-205-2263. Quick break, then your questions when we return.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Saving money in an IRA or a 401k can provide tax advantages and are excellent ways to help make sure you're financially prepared for retirement. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're nearing retirement, you need to be aware of the federal regulations regarding required minimum distributions. Once you reach a certain age, you must begin withdrawing money from these accounts. RMDs can influence which accounts to withdraw from first and how much you'll owe in taxes during retirement. If you need information regarding the rules related to RMDs, call us at 800-393-4001 and ask for your copy of our new free guide called Frequently Asked Questions about Required Minimum Distributions. RMDs are a core element to your retirement strategy, and this guide can help educate you on the rules related to them. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Cushing & Dolan are experts in elder life planning and taxation. They know that every family is unique and that every estate plan must be different. Early planning is crucial if you want a stress-free retirement, and trusts are oftentimes the document of choice to help protect your assets. But with so many kinds of trusts, you need to learn about which one is right for your plan. Revocable and irrevocable trusts are most common, but there are several differences, as well as numerous tax implications with each. If you're ready to start your planning or need to refresh an existing plan, call Cushing & Dolan and ask for their new guide called Demystifying the Top 7 Estate Planning Trusts. Learn how to protect your assets and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Still got a little bit more room on the phone lines at 888-205-2263 if you've got a question for Todd. But let's go first to Kenny in Tewksbury. Kenny, what's your question for Todd Lutsky?
Yes, I've got a piece of property. It's coming out of an irrevocable trust that was made 20 years ago.
Huh?
There's five siblings, and one sibling would like to buy out the rest. Is there capital gain?
Okay, so it's a question that I can give you an answer to, but understand, not having read the trust, it's complicated for me to know. But here's what you need to look for. I'm assuming that your parents maybe put the property in the trust. Is that correct?
Yes.
And when did they die?
There's one. My mother is still living.
Oh.
I'm talking about in the future. I mean,
Oh.
she's very old.
Oh, okay. So it hasn't come out yet, and it's not coming out till she dies, correct?
Yes.
Okay. So upon her death, you'll have to determine whether or not the assets in that trust are included in her estate for estate tax purposes. What I mean by that is irrevocable trusts are not always completed gifts. So when I take when we prepare an irrevocable trust at Cushing and Dolan for Medicaid nursing home purposes, assuming that's what this was prepared for, was it designed to protect the house from the nursing home?
Yes, with a living estate.
Oh, so you're saying she kept a life estate in the deed, the right to live there?
Yes.
Okay, so they put the remainder interest into the trust and retained a life interest.
Yes.
Oh, okay, that's entirely different. So now I don't need to read the trust. I don't need to know what the trust says, because when you retain the right to live in a property, the government says, yes, you gave away the remainder interest, but you retained the right to enjoy what it is that you gave away. And therefore, the government says you didn't cut the string, you didn't make a completed gift, and the asset is going to be included or pulled back into the estate for estate tax purposes, not for probate purposes, but for gross estate tax purposes. So the full value of that property will be included. I don't know if that's going to push her over the $2 million Massachusetts limit or not, but if it does, then there'll be a mass estate tax. But the good news for you is there will be no probate, or there will be a full step up in basis. So when the property comes out, if it's worth $1 million, it'll be as if the kids paid $1 million. They can sell it the next day for $1 million, and their gain would be zero. So there'll be no capital gains tax when this property is sold, if it's sold shortly after the death of the decedent. I say shortly, within 6 months, 9 months, something like that. So hopefully that's helpful. And that's good news, folks. It's very important to understand these trusts. That's exactly what the new guide is all about this month. Demystifying the 7 top estate planning trusts that I run into. And these trusts are all different. They all have different issues when it comes to taxation, whether it's a gift tax, an income tax, a step up in basis issue like this, whether they're designed to protect assets from the nursing home or special needs children. So this, folks, learn about how these trusts work, from taxation to operations to control while you're living. We're talking about irrevocable life insurance trusts, revocable trusts, irrevocable Medicaid trusts, you name it. The top 7 estate planning trusts are in this guide, and they will help you better design your own estate plan and determine which ones are right for you. So please get the guide, brand new for the month, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another caller for you here. Let's go to Hillary in Maryland. Hillary, what's your question for Todd Lutsky?
Yes, I have a living revocable trust, and I was just going to put my property in that. But I also was thinking of putting it in a I guess it's a nominee land trust, but it would be a land trust just for privacy purposes, and then have that trust, my living trust, be the beneficiary of that. And then just, and then upon my death, my beneficiaries, I suppose, would, I don't know if it's hard to unravel once, if you have a trust and a trust. But I was wondering if that's maybe what you're talking about when you're talking about this nominee land trust being a problem.
Well, I can tell you in Maryland, it's probably hard for me to speak to because I'm not licensed in Maryland, but I can tell you if it's a nominee realty trust, yeah, it's that flow-through vehicle. And that's the way you could do it. You could use a nominee realty trust, make the beneficiary the family revocable trust that you're speaking of, and that'd be okay because then it would be in the revocable trust. But, I don't think you need it. I don't think you need that intermediate step. Is my point, right? You can simply just deed the property directly into the revocable trust. Now, in Massachusetts, we do this. We deed it directly into the revocable trust, and we do not put the revocable trust on record. That's got all your wishes, your family wishes, where things are going to go when you die and how they get there and when they get there and why they get there. That doesn't go on record. A simple trustee certificate goes on record indicating that this trust, this revocable trust, exists so that you don't have to, reveal any of that other information. So I would say my only question to you would be the revocable trust would be enough, not the nominee realty trust. But how old are you?
50s.
I'm sorry, you beeped out. How old?
Late 50s.
Yeah, so I don't know if you're starting to think about protecting assets from the cost of long-term care. If you are, then, I bring it up when I meet clients, 60 and over, 65 and over. So, if you're like 58 or 59 and you're approaching 60 that quickly, you might say, well, why would I want to set up something now that I might just have to, redo in 3 years, 5 years, if I want to protect it from a nursing home. And so if that's a concern of yours at all, then think about an irrevocable trust. And if it's not, then even with the revocable trust, I'm going to mention, don't just stop with putting your house in. So with the revocable trust, I'd put in your bank accounts, your investment portfolio, retitle it to the trust. So it too will avoid probate and get to your family in exactly the manner that you want all those assets to go. Caution, though, one thing you don't put in a revocable trust or a Medicaid irrevocable trust would be the IRA type assets of the world, your retirement accounts. That would be the problem. So don't put those in because those would then create a taxable event on the moment you transfer it to the trust. So just some things to think about, folks. Different kinds of trusts for different objectives that you want to accomplish in your estate plan.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Cushing & Dolan are experts in elder life planning and taxation. They know that every family is unique and that every estate plan must be different. Early planning is crucial if you want a stress-free retirement, and trusts are oftentimes the document of choice to help protect your assets. But with so many kinds of trusts, you need to learn about which one is right for your plan. Revocable and irrevocable trusts are most common, but there are several differences, as well as numerous tax implications with each. If you're ready to start your planning or need to refresh an existing plan, call Cushing & Dolan and ask for their new guide called Demystifying the Top 7 Estate Planning Trusts. Learn how to protect your assets and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your guide today. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Still a lot more to come as we get into our second hour of the Financial Exchange. We'll talk a little bit about retirement and what percentage of Americans feel like they're prepared financially for retirement. Also going to be a little bit of chatter about tax policy and what things look like heading into the next couple of years. And we've got to talk a little bit about all the money that Intel received as part of the CHIPS Act. And, hey, that spending not looking like the best payoff right now, but we'll talk about that and also a little bit of EV chatter as well. So still a lot to come in hour 2 of the Financial Exchange. Stick around. We're back in just a couple.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai. Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699 or request the guide online by visiting their website at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Frequently Asked Questions About RMDs. Mike, one of the places where there's been a huge change in the last few years is with regards to inherited IRAs and whether individuals are required to take money out of them on an annual basis. What is the latest guidance from the IRS?
Well, the latest guidance is that it still depends. It depends on so much and so many complicating factors. Were you married at the time that you passed away? What's the age difference between you and the person who passed away? Are you older or younger? When did the person pass away? I could go on at length here, Chuck, but there are a lot of complicating factors. But generally speaking, yes, you are going to be subject to a required minimum distribution in most cases when you inherit a retirement.
And for someone who is inheriting a retirement account from someone other than a spouse, there also is this 10-year period with which you must exhaust the account completely. So you're going to have to end up having all of that come out as taxable income, even if your RMDs don't satisfy that 10-year requirement.
Yeah, they really like to complicate this. And so you've got two competing formulas in there at all times about what you have to do with a retirement account that's inherited. Really, really complicated stuff, Joe.
It's a really complex issue. If you like to learn more about this topic, the guide again is titled Frequently Asked Questions About RMDs. And the way to request it is by calling 800-393-4001. That guide again is titled Frequently Asked Questions About RMDs, and the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K. A run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org,
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tuck. As we round financial gain. At the moment, we've got a modest bounce happening across major U.S. equity markets, with the Dow up 219 points, the S&P up 22, and the Nasdaq up 93. So about a 0.5% bump on all three major U.S. indices. The 10-year U.S. Treasury is down about 5 basis points.
All right, well, we're going to try and reconnect Chuck there. I'm not sure what's going on with that connection there today. But, yeah, it is the second hour of the Financial Exchange. We'll effort Chuck here and try and get him reconnected here. But just want to recap yesterday's tech sell-off, if you will, Mark. We saw the Nasdaq close down over 3%, S&P 500 down over 2%, and we kind of saw something similar back in early August. So I don't know, could you kind of recap what we saw yesterday and maybe why it happened? Any insight on that front?
Now, financial journalists, as you know, always attribute a big sell-off to something because it's easy to think about it that way. It's kind of comforting to think we have a grasp of why things are moving the way that they are. But in fact, movements, even large movements, are often random. I'm not suggesting that they're not responding to underlying economic and market events on average in some kind of rational way, but big moves can be random. Big moves, even big crashes, are just small crashes that kind of got out of control, that snowballed, if you like, and there are lots of examples of this throughout history. So it's normal to want to attribute effect to cause. Again, I think there's something comforting in knowing or thinking we know about why something happened, but these big movements are part and parcel of stock ownership, as we all know. Volatility, as Chuck Zodda, wherever he is right now, likes to say, is a feature, not a symptom of market malfunctioning. It's normal. It's the price we pay for high long-run returns. So today, Tuck, as you point out, we're seeing stocks rebound modestly. It's not obvious to me that the economic news that we got this morning, which was the so-called JOLTS, Job Opening and Labor Turnover Surveys, what that acronym stands for, it but outright showed, to the extent that these estimates are reliable, that number of job openings shrank by a few 100,000 last month, and that they're at their lowest level now in a few years. You may recall that the so-called JOLTS report was something people followed very, very closely when inflation was very high. And naturally, more job openings indicates greater demand for workers, a hotter labor market. We were struggling to explain it. JOLTS largely did. Inflation's come down, JOLTS has come down, other measures of labor market tightness have come down. So all of these measures are sinking and pointing, I think, to or telling the same story, to the extent that inflation was attributable to an excess of demand, which manifested itself in an overly tight, an unnaturally tight, if you like, labor market. Those conditions have eased.
All right, we have Chuck now back. Chuck, we were just touching on yesterday's sell-off and JOLTS this morning. Any other follow-up thoughts there?
Yeah, I mean, I think that when we look at the data here and try to make sense of it, there's clearly a slowdown that's happening. The question is it the slowdown that you want to see to get to the point where, you know, you feel that there's no risk of the labor market causing further inflation, or is it the kind of slowdown that leads to recession? And we're not going to know for a little bit longer here, but the data is kind of ping-ponging between those two possibilities on kind of a weekly, bi-weekly basis right now. So we'll see where this ends up going, but there's a definite slowing in the data that we're seeing. And the other thing is, as Marc has said before, look, you get to a point where, hey, if the data continues to slow and interest rates come down further, then you get to a point where people say, hey, gee, I didn't realize that mortgage rates, are back in, the high fives now if we get there, a couple months from now. And maybe they start looking at buying homes in the spring. So it's a dynamic system that's never static. And ultimately, it's one where we're going to be sorting through what happens for a little bit here. I don't think that we have any clear answers right now, and we're still trying to figure out exactly where this economy and these markets are going to be going. So that's where we stand at the moment here. Marc, I want to talk a little bit about this piece from CNBC. 44% of workers are cautiously optimistic about meeting retirement goals. And I'm curious to get your thoughts on, I know that, polls about feelings about retirement are kind of hard to, draw a ton from, but I would make the case that if 1 in 2 people are saying, hey, I'm pretty optimistic about retirement, I don't know that that's a horrible result, actually.
No, that, just from memory, this could be off, but I think that's relatively good compared to respondents historically, say over the last couple of decades. And part of that may be attributable to an increasing number of tools, either through your 401k provider or through your financial advisor if you work with one, that allow you to get a quick and reasonably accurate assessment of how likely you are to meet your goals. You tell your advisor or even your 401k provider through the tools they make available on their website what your annual income goal is and when you want to hit that by. Say, I want to retire on $50,000 a year in today's dollars at age 65. It'll tell you the likelihood that you can convert your 401k into a so-called immediate annuity at that age. This is a tool we didn't have in the mid-90s. It became available starting in the late 90s, and now it's very widely available to not only anybody with a 401k, but anybody with an IRA with one of the major providers, and certainly to clients with a reputable advisory firm. So people now have tools at their disposal and relatively easily accessible tools that'll tell them whether or not they're on target. There's no reason, unless you're not eligible for a 401k and have no access to financial education tools at all, no reason why most Americans shouldn't have ready access to a number like that.
When you look at the data here, one piece that is interesting is even though about half of workers say they're cautiously optimistic about reaching, their retirement goals, 82% of workers say that achieving a comfortable retirement is going to be much harder or somewhat harder to achieve than it was for their parents. And I'm trying to make sense of this, and there are two things that come to mind. The first is, look, the generation that is retiring now and generations that will be retiring in the future largely are using defined contribution plans, not defined benefit plans. So I think that there is no pension that's necessarily taking care of people the way that, you saw for really the kind of the generation that was working from in that post-war period through the 1980s and 1990s. But other than that, I wonder if we end up looking at that as something where we view kind of that period as the norm, because we all know people that, worked from, 1950 to 1990, and, they were working for 40 years and we knew them for that time. And then we saw them retire and have a 20, 30 year retirement and so on and so forth. And so that seems normal to us. But if you look at pretty much the rest of American history, that looks like the outlier. And I wonder if we're just interpreting that period as, hey, what should be normal to retire into, as opposed to, hey, the U.S. was just abnormally wealthy in the immediate aftermath of World War II. And so as a result, it was easier for companies to pay for their workers' retirement, and that's not the norm going forward or going back.
No, I think you nailed it. Those were heady years. Economic growth was very high in the 50s and 60s. It was even high in the 70s. We tend to view that decade now as one of disappointment, political, economic, geopolitical, you name it. But in terms of economic growth, the real rate was very close to the 1980s. So it was only relative to and of course, the uncertainty associated with high inflation sours our perceptions of that period. But only relative to the extraordinary growth of the 50s and 60s, which resulted from us being the only major power without damage to our industrial base after World War II. We were like 70-80% of the world's manufacturing, or maybe we're closer to 50, but 70-80% of the world's oil output after World War II. Anything that could be made on a factory line was made in America because everybody else's industrial base was bombed to oblivion after World War II. So we came out of that much like we did World War I, as not only the world's creditor, but the hub of the world's manufacturing. Next 2 decades were relatively high growth. So, yeah, Chuck, I think we're comparing it to that golden era of growth. And, of course, life expectancy was shorter than 2. So it was easier, if you like, in an actuarial sense, to offer a pension, and easier to provide benefits like Social Security and eventually Medicare.
Let's take a quick break here. When we return, we've got trivia, and then we'll talk a little bit about the tax doom loop after this.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network. If your business needs help tracking inventory, SAB Solutions can help. We've been helping businesses change from manual to automated warehouse management systems for more than 15 years. And when we put our solution in place, it'll make your business more efficient and avoid delayed shipments to your customers. SAB Solutions understands inventory management, and by using our system, your warehouse will quickly show an increase in productivity and accuracy. For a no-cost assessment, visit us online at sabsolutionsma.com. That's sabsolutionsma.com. Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699, or request the guide online by visiting their website at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Saving money in an IRA or a 401k can provide tax advantages and are excellent ways to help make sure you're financially prepared for retirement. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're nearing retirement, you need to be aware of the federal regulations regarding required minimum distributions. Once you reach a certain age, you must begin withdrawing money from these accounts. RMDs can influence which accounts to withdraw from first and how much you'll owe in taxes during retirement. If you need information regarding the rules related to RMDs, call us at 800-393-4001 and ask for your copy of our new free guide called Frequently Asked Questions about Required Minimum Distributions. RMDs are a core element to your retirement strategy, and this guide can help educate you on the rules related to them. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only. Well, on this date back in 2002, American Idol crowned its first winner, Kelly Clarkson. Clarkson has gone on to have an incredibly successful career, selling over 25 million albums. Unfortunately for Kelly, she's only the second most successful American Idol contestant ever. Trivia question today: who is the most successful former American Idol contestant? Once again, who is the most successful former American Idol contestant? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, there's a piece in the New York Times. It's titled, "Can Democrats Stop the Tax Doom Loop?" The Doom Loop. Here is what this is talking about, actually, is that next year is the last year of the Tax Cuts and Jobs Act provisions staying in place, meaning if Congress does not extend or change those provisions for 2026, then the tax cuts that were put into place by President Trump back in 2017 expire. And it's a familiar place the Democrats have found themselves in back in I forget exactly what the year was. I think it was 2012. The Bush tax cuts were set to expire, and Democrats and Republicans negotiated basically to keep most of them around for individuals and families earning less than $400,000 and $450,000 respectively. But most of the other tax cuts went by the wayside at that point. And so what this piece is talking about is that Democrats are looking at polling on the issue of taxes and kind of saying, hey, there's not necessarily a justification for extending these. Maybe we should just let them expire. And that's something that they are discussing as a possibility in terms of how they try to set tax policy in 2026 and onward, if they were to have control of the presidency and or either branch of Congress. Your thoughts, Mark?
Well, outlays as a percentage of GDP continues to go up. Government's spending more. There doesn't appear to be any end in sight to that trend. It's mostly been the case since the war on terror started. So government's getting bigger in terms of spending, again, as a proportion of the economy. At the same time, we're getting older. We require more benefits. So part of that is Social Security, Medicare, Medicaid, primarily Social Security and Medicare, I guess. And then moreover, where, as you pointed out, we cut taxes in 2001 again. And now then there was a recession argument for doing it. We did it again after they won the midterms in 2002. And Dick Cheney famously said deficits don't matter. And really from that point on, it's been off to the races. There hasn't been a party at the national, there hasn't been a candidate, I should say, at the national level, a candidate for president that ran on a platform of cutting the deficit, of like fiscal austerity. Then again, few do. Clinton's famous now as being a deficit cutter, and deservedly so. But he ran on spending more, not less. So I don't know, Chuck. There appears to be no appetite for it. It's not even discussed in the current campaign, which is both sad but at the same time not surprising. Now the question is, when do interest rates start to reflect that? Maybe they already do. Maybe the 10-year would be 2.8 instead of 3.8 today. We really don't know. You can't test that possible alternative history. But at what point do big deficits and resulting debt really start to pinch? And do we, as consumers, really start to feel it in the form of higher interest rates? I don't know.
And when we look at the history there are two numbers that matter from a deficit perspective. It's, look, what are your outlays each year as a percentage of GDP, and what are your revenues? And outlays, the interesting thing, and Marc kind of got into this a little bit, post-war, you look at 1948, and outlays were about 11% of GDP. That's what the federal government was spending. By the mid-1960s, that had bumped up into kind of the 15 to 17% range, and it stayed there through the early 1970s. It then bumped up into the 20s in the mid-80s. And so you saw, kind of, again, this additional expansion of federal government spending throughout the mid-80s before, in the late 2000s, getting back down into the 17% range. Today, it's sitting at about 22%. Again, for much of the 2010s, it was right around 20%. So it's kind of been this, if you look at the long-term trend, it's this gradual creep up of, a couple percentage points a decade over the last 5 or 6 decades. On the other hand, when you look at federal receipts, the thing that's fascinating here is, for as much debate as there is about tax policy and, we're going to do this and we're going to change taxes this way and that way and we're going to do this and that and yada yada. For the last 70 years, federal receipts have been between 15% and 18%, with a couple outliers, on each side. The late 90s saw a ton of tax revenue come in because of the dot-com bubble and, a bunch of capital gains taxes that were being raised. But otherwise, you've basically been in this narrow, 2 to 3% range for federal receipts. So for all the hand-wringing about, hey, here's how much taxes change and here's how much this administration's going to do this and that, basically no one really makes any significant moves on taxes. They're around the edges and they have these, little tweaks that end up happening. Whereas on the revenue side, on the spending side, it's just this steady march up over the last 70 years or so in terms of federal spending as a percentage of GDP. And that's kind of how we ended up where we are, is we've spent more as we've gone through the last 70 years, and revenue has remained remarkably consistent regardless of administration or party or anything else. And that's why we are where we are today. Taking a look at markets as we head towards the bottom of the hour, the Dow is up about 0.25%, S&P about 0.1%, the NASDAQ is now flat at this point in time here.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt. Call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house. You can sell your house. You can buy another house. You can invest your money. You can manage your money. You can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
All right, today's trivia question was, who is the most successful former American Idol contestant? That would be Carrie Underwood. She won Season 4 of American Idol and has since become the highest-selling female country singer of all time. With over 70 million albums sold, Underwood also beat out Kelly Clarkson by winning 8 Grammys to Clarkson's 3. Winner today of the Financial Exchange Show t-shirt was Dan from Nashua, New Hampshire, and Dan's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mark, you are a Volkswagen driver, correct?
I am.
So this piece today, again, kind of a big one. Well, not really a big one for you because you're a Volkswagen driver. You don't work at a plant in Germany, so it's not quite the same.
I read it with interest. It's concerning.
It's a really interesting story. So Volkswagen is considering the closure of a manufacturing plant in Germany for the first time ever. And the big thing on this is Volkswagen Corporate is saying, look, we're facing, a bunch of new entrants into the market, most notably these Chinese EVs that are entering the European market. We have a tough economic environment that we're dealing with, and we need to be able to do more cost cutting than what we normally do. The union for Volkswagen employees is fighting back and saying, hey, this is not, the result of, what you say it is. Instead, you decided to build, products that aren't popular enough, and you're not doing enough work to, keep us competitive, blah, blah, blah. And so, most notably, they said, look, why didn't you invest anything in trying to develop hybrid technology that's very popular? And so this is a battle that is shaping up between Volkswagen management and their union. And ultimately, while this is a, something that, does relate to the high cost of manufacturing in Germany, ultimately, in my opinion, the real issue is the one that I noted at the beginning, which is, look, you've got China providing huge subsidies to electric vehicle makers, and they are now exporting those EVs into the EU, and it is, causing some real damage to the German manufacturing base, as we can see here. And Europe, despite this very direct threat to what is the economic engine of the region, Europe does not seem to want to take this seriously enough by raising tariffs on Chinese EVs to the level that's needed in order to maintain adequate competition for domestic manufacturers. And I know people will say, well, you need to have free trade in this and that. Well, that also means that, hey, China's got to abide by those rules of free trade, and they simply don't when it comes to how they are subsidizing their manufacturers in this industry in particular.
So are tariffs even on the table here as a solution? I don't.
They are. So let me.
Sorry, I don't have the context.
So it's not from this piece. It's so back in the spring, Europe said that they were going to. I'm just pulling it up now just so I can have the rates correct. Europe said that they were going to. On June 12th, they said that they were putting into effect higher tariffs of 17.4% on cars from BYD, 19.9% on cars from Geely, and 37.6% from SAIC. And then a couple weeks ago, they backtracked, and this is from August 21st, so just 2 months later. I'm quoting here, this is from CNN. The European Union might have just given Tesla's future sales in the region a boost by setting tariffs on its China-made vehicles considerably below those imposed on rival electric automakers. On Tuesday, the European Commission, the EU's executive arm, set their rate for taxes on Tesla EVs at 9%, but then they ended up, coming in at these lower levels, kind of in the 10 to 12% range that they set on Chinese EVs. So basically, they, pruned what they were going to be doing, and it's, I don't know, I find it kind of disappointing in terms of, how they're approaching this, because in my mind, if you have a country that is, subsidizing to the extent that China is, their EV production, you want to do something to offset that. And this is a place where I think that tactical tariffs make a ton of sense.
I guess it depends on the consensus reached by your political system. I mean, the economic argument is, well, then you focus on where your comparative advantage lies. You make something else. Germans have decided, and this has a long history, they've decided that they will accept slightly lower, not much. They're a very wealthy country, not as wealthy as we are, but very wealthy in a per capita sense. They'll accept slightly lower growth and living standards. Well, I shouldn't overstate that. Their economic growth is stalled there, and part of it is undoubtedly attributable to the power that their social contract, even if it's an implicit one, this sort of agreement that business and labor and government are co-equal partners in setting economic policy, they've consciously made that decision to trade off higher growth, the rough and tumble capitalism that we practice here. They've made a decision not to adopt that. Many social democracies have, including our neighbors to the north, Canada. Scandinavian countries are other examples. That's the way they want to live. Good luck. I would take the subsidized Chinese crap and focus on where we have a comparative advantage, which is largely what we've done until the past several years.
Summer is coming to an end, so it's time to take your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th to January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Mark, I want to talk a little bit about traffic, if that's okay with you.
Sure.
So there is a company by the name of INRIX who they're a traffic data analysis company. And what they are seeing is that as opposed to the typical kind of pre-pandemic rush hours that you would see at 9 a.m. and 5 p.m., instead what you're seeing is a little bit more of a midday rush hour that picks up, and then that activity continues throughout much of the afternoon. And this is largely attributed to two factors, one of which is the availability of remote work and workers who might come in just for a portion of the day. And the other one is that as a result of that, people may have moved further away than they used to live from their offices. And so you end up with much more traffic throughout much of the day, but the peaks are not quite as trafficky as they used to be. Your thoughts?
Makes sense. I've experienced it myself, thanks to the generous work schedule allowed to me by my employer. I appreciate the flexibility, and I've myself witnessed unpredictable changing in traffic pattern. You used to be able to count, and I think many could probably relate to this, Tuesdays and Thursdays used to be harrowing. Friday, morning or afternoon. Friday morning was great, always a cakewalk. Friday afternoon, I don't know whether people spent the night on Thursday and they had to go home on Friday but not go in. I've never been able to figure that one out. Friday afternoons have been terrible. Now things are far less predictable, and Chuck, that explanation is consistent with my own experience, what I'm hearing in the experience of others, and what we're reading in accounts like this, and I think it's a good thing.
Yeah, I do as well. It's something where ultimately I think we're still sorting through, what the longer term implications of this are, but certainly it's, the one thing that you see is, again, and I'll see it, if I'm, commuting to a different office or, commuting, again, to and from the office, depending on, what my schedule looks like. But yeah, the afternoon busyness does seem to start around 1:30 now, as opposed to, the 3:30 or 4 that it used to start at. So there are some definite changes that have happened in this report, saying, hey, it's not just what you're seeing locally. This is something that you're seeing nationally as a trend in traffic patterns. Quick break here. When we return, we'll do a little bit of stack roulette.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
If you're approaching or have recently reached the age of 73, required minimum distributions should be a key consideration as you evaluate your retirement strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There are several factors to think about when it comes to RMDs, including the types of accounts that require RMDs, when to take your withdrawals, how your RMD is calculated, and the penalty for missing all or part of an RMD. That's what our new guide this month is all about. It's called Frequently Asked Questions About Required Minimum Distributions, and you can get your copy today by calling 800-393-4001. RMDs are a key part of your retirement strategy, so don't delay. Get your guide today by calling 800-393-4001. That number one more time, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Summer is coming to an end, so it's time to take out your planner and book a spectacular vacation in the U.S. Virgin Islands, America's Caribbean paradise. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity is at an all-time high. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you need to book a trip that you'll never forget. If you act fast, you can still celebrate New Year's on St. Croix and enjoy the St. Croix Crucian Festival from December 26th through January 4th. Enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. Fall naturally in rhythm with the heartbeat of the islands on your trip to America's Caribbean paradise. Go to visitusvi.com and make your plans today. That's visitusvi.com. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai. Trusts are essential documents that can help protect your assets from the nursing home. Call Cushing & Dolan right now at 866-848-5699 and get their free guide called Demystifying the Top 7 Estate Planning Trusts. Let them help determine which is right for you. That's 866-848-5699. Or request the guide online by visiting their website at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mark, what do you have for me for Stack Roulette today?
Chuck, good article in the Wall Street Journal. Everyone should check it out. Trump, as the title, wants to drill, baby, drill. We all know that. He stole that phrase from Larry Kudlow. But can he cut energy prices? They ask. And the upshot, you don't have to read the 20-odd paragraphs that comprise this article. The upshot is no. No policymaker can. The price of oil is globally determined. It's influenced by factors mostly, if not entirely, outside of any one president's control, any country's control, really, private or public sector in the short term. The issue right now is not that the federal government is restricting drilling. We're drilling more than we ever had. We've never been fully energy independent. We've always imported a little bit, even during the golden era of Trump's term, as some of you like to think about it in terms of oil prices. But there's very little a president can do. Oil companies have said they're not going to drill more. They like high profits. If anything, his deregulatory agenda for the oil sector, which is probably mostly a good idea, will do nothing but increase profits, not the supply of oil. Again, good article. Yeah. Worth checking out.
Yeah, if you look at gas prices in the last 25 years or so, the only times that we've been, really 20 years, since kind of the middle of 2005, the only times that we've seen gas prices down around $2 a gallon, there are three key instances. The first is early 2009. The economy was awful. The second is early 2016. The economy wasn't terrible, but basically what happened is Russia decided, hey, we want to put all of the U.S. frackers out of business as quickly as possible, and so they just pumped as much oil as they could, and it devastated the U.S. energy industry, which, if you want to ask, hey, why are U.S. energy firms a little bit hesitant to pump more with, how much they could still make on each marginal barrel of oil? The answer is late 2015, early 2016, when Russia put the screws to them. And the third time when you saw gas prices down in that range was May of 2020, when most of the economy was still kind of emerging from the initial shutdowns after the COVID-19 pandemic kicked off. So none of those are situations where you look at it and say, hey, that was, the result of policy in the United States that caused this. No, they were either bad economies or someone else saying, we don't care about profit, we're just going to pump no matter what. In basically any other period during that time, gas has hovered between $2.50 and $3.50 a barrel, and there's no correlation between what policy was at that time and where gas prices ended up. You can make a case, hey, is it better for us to try to produce domestically so that we're not as beholden, to other countries that might not share how we want the geopolitics of the world to, unfold? Sure, of course, but that's different from saying that you're going to be able to change gas prices simply by shifting the policy that you are, conducting domestically. As we've seen, look, if the United States says, hey, we're going to pump more in order to get prices down, OPEC might simply say, fine, we want to continue to be profitable, and we're not going to pump as much then. So
there'd still be a global price for oil, though. Are we going to determine? You can't cut off international demand. How are we going to determine the price of a gallon? Even if we said we're not going to let in any foreign oil, we're going to refine it here from soup to nuts, from when we take it out of the ground till it goes into your car. How will you determine the price for that? Supply and demand? Okay, does that mean you're not going to let any international buyers into this market? That's not workable. Magic bullets like this are always fanciful, and this is an example of a great example of one. Again, check out the article. They spell out the pros and cons.
Mark, I want to talk a little bit about space here, if that's okay.
Of course.
Okay. So the Boeing Starliner, which is, it's supposed to be undocking from the International Space Station later this week. But over the weekend, there was this mysterious sound that started permeating through the Starliner. It sounded like a sonar ping. Unfortunately, it was not aliens coming to, destroy Earth with, greater technology. What, in fact, it turned out to be was that there was an echo from some kind of hot mic that was, echoing over the speaker and generating that feedback that you get. And they were able to identify that as the problem rather than anything more exciting like, the aliens from Independence Day coming down and, trying to devastate humanity or anything like that.
So this was a big relief.
Yes, it was.
I missed the alert.
It was a microphone that was turned on by mistake and not aliens coming to destroy us.
I mean, if I start hearing eerie sounds after being in that space shuttle, what I thought was going to be 8 days or whatever it was, and it's now been months, oh boy. Your mind's going to start playing tricks with you at that point.
Any action would be welcome.
That too, yeah.
And
Moon's haunted.
You'd be famous.
The moon's haunted.
Moon's haunted. Get it out of here. Taking a look at markets at the top of the hour, we got the Dow up 63 points, the S&P's up 1, NASDAQ up 4. So not a whole lot of movement today in either direction after a big downward slide yesterday. We'll see what ends up holding up in the afternoon. And we're back tomorrow. We got more jobs data with the weekly jobless claims. All that and more coming up on tomorrow's show on the Financial Exchange.